Hey everyone, welcome back to another webinar this week. Just a quick sound check before we go on. How's everyone? Hope you guys are doing well, and thanks for joining in. And where are you guys located at? If you can type it in, that'll be great. Share, you know, just a quick sound check. Okay. All right, so tonight it's actually going to be a little bit different. I'm going to talk a little bit more about your financial goal, okay? And then we'll talk a little bit more about the asset types, the asset classes, the different properties of an asset. And then a couple of key questions that a lot of you that just started out want to know, right? So we are actually going to take a step back away from trading a little bit. We're going to talk more about the general financial health, I guess. Okay, so this is how investing changes through times. Now, I know from the title, you guys are probably thinking, what was investing 50 years ago? What was investing 20 years ago? We're not talking about that. We're talking about times in relation to your financial situation. Okay, so my name is Vito Henjoto, and we can kick it off tonight. If you have any questions, do type it in the chat. I'll review it. And then we also have a discussion at the end of the session if you do have any questions regarding, your financial well-being, I guess. But this is a new series that we are looking into. Okay, so before we begin, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. We're going to talk about investment objectives later on, so this is definitely part of that. Strategies and charts used in this presentation are for example only. We're not going to be talking about strategies and charts. You are reminded that past performance is not indicative of future performance. Okay, so let me just reply this chat. Okay. So we're gonna talk about financial goals, right? I was thinking of starting the session by showing you pictures of maybe a mansion, maybe a Lamborghini or a Ferrari, but I don't want to talk about dreams, right? I want to talk about financial goals. Okay, so I'm gonna split it up, okay, later on. But the questions that you have with your financial life, or what is your financial goals, is that what kind of life do you want now, or what kind of life do you want later on in your life, right? What do you plan to achieve in your life? Now, with this major changes in life, it usually revolves around your finance. So financial goals to me are just small steps you take towards your dream. When I talk about dream, I don't use financial dream. We are going to talk about dream as in general. What do you want to achieve? Like, what do you dream of? I mean, you guys are here for a very good reason. I probably know what that reason is. I'm going to shut it down later on. But what are you trying to achieve? That's the kind of stuff that we want to talk about. So you can dream big, okay? But you need to be realistic with your financial goal to realize that dream, or to realize your dream. So the whole thing with the session is that this is not designed to encourage you to dream unrealistically. When I talk about dreaming unrealistically, maybe you start trading today or 1 week or maybe a month, and then you say, yeah, you know what, within 1 month, I'm going to get myself a Ferrari. That's probably okay, I guess, if you have a lot of equity to begin with. But if you're starting out small and you're starting to think about owning a Ferrari maybe in 1 month's time, that's a little bit unrealistic to a certain degree. I'm not saying it's not possible, okay? But the whole thing with the session is I want you guys to actually break it down. What are the steps you need to take care of, so that you can achieve that dream. So financial goals also need to be able to adapt to changing situations. Okay, so it's not something that you write down and you stick to it. It's not something like that. As true with the title, as time changes, as your financial situation changes, your goals are going to change as well. Okay, so before we begin, how about we start with something? What do you guys dream of when you guys get into trading? I mean, you guys are watching Octa FX YouTube channel. Okay, there must be something you guys dreamt of. Okay, I'm not here to tell you the dream. I'm actually the other way around. I'm actually gonna bring you guys down a little bit, one notch, maybe a couple of notch down. But type in the comments and let me read a few of your dreams. What do you actually dreamed of when you start looking into trading? Okay. So do type it in, but let's talk about a couple of unrealistic dreams. I can actually come up with anything, because even buying a Lamborghini, for example, or a Ferrari, it still is a goal, and to a certain degree is actually achievable. When I'm talking about unrealistic dream, you know, I had a few listed in there, but I kind of have to break it down to basically just two that to me is really unrealistic. One is to win a lottery. Okay, it's called a lottery. So it's a dream, right? Everyone dreamt of winning a lottery. I mean, everyone took a chance at it, but not everyone gets it. Obviously, millions of people, there's only one winner or two winners. And then the other one is, I heard about this a lot. You know, you want to live in luxury without working or without taking any risk in life. You just want to enjoy life, having fun, but you don't really want to work or you don't want to risk anything. It doesn't work that way. And I've been in the industry for so long. I'm not offering anything and I'm not taking any clients or whatever. But when it comes to money, it just never ends, right? To a certain degree, it's just like you achieve one financial goal and then you go on to the next one. So it's like there's no end to it, okay? And without doing anything with just, you know, being lazy and stuff like that, it just doesn't work, okay? So it's unrealistic. Now, when we talk about goals, it's actually basically just setting the right outlook, okay? So for example, you're thinking of creating an emergency fund, you know, just in case anything happens in your life. You know, you got an extra stash in your savings or a separate saving account that you can tap into when you need it. Okay, maybe build up a saving to buy a home. Maybe build up a saving to buy a car, a yacht, a camper van, or a supercar. That's a goal. I'm not gonna classify that as a dream, because to me, it's achievable to a certain degree and you can actually plan it out. So if there's something that you can actually plan out and you can break it down into smaller goals, it's still a financial goal. Okay, maybe you want to renovate your home. Okay, maybe you're not happy with life. See this, finding a new job, right? Maybe you're not happy with your current job. Maybe you're looking for a new job. That still counts towards financial goal, because job produces income. Okay, and you need that income to achieve your financial goal. Okay, maybe you are thinking of saving up some money. Maybe you want to start a business, or maybe some of you are getting married in a year or two or planning to get married. Okay, it costs money to get married. Okay, maybe you're thinking of doing further studies, or maybe you are actually still studying. You need to think about your educational expenses. Okay, maybe you are planning to retire early. You're planning to retire from working full-time, and probably more than half of you is looking at this. You're probably thinking of retiring from working full-time by looking at other investments such as trading. Okay, maybe you're thinking of migrating to a different place, a different city, or a different country. These are your goals. It looks like your dreams, right? And when I talk to a lot of people, and I deal with a lot of my clients. I mentored a lot of traders. when I say goals, they kind of lump it up with dreams. So they'll tell me my dreams. Okay, so they'll tell me their dreams. I don't, not my dream. They'll tell me their dreams, and it kind of falls in line with what I would classify more as a goal rather than dreams. So yeah, I mean, goals and dreams, I think they're interchangeable when it comes to the word usage. But one, it's just you hoping for something, but not really planning to work towards it. While if you classify it as goals, it'll set up a different mindset where you're actually working towards those financial goals. Okay, so there are differences, small differences, very similar, but between dreams and goals, they typically lack something, and that something is working towards it. Okay. Okay. So I'm just gonna go through increase my earning and having financial freedom. Okay, let's talk a little bit more about financial freedom, because I was planning to put that word in there, and then I actually just wrote an article about financial freedom and stuff like that. But when we talk about financial freedom, as I said earlier, it kind of loops back. What do you define as financial freedom is going to be different with everyone else in this session right now. Okay, I did talk about this before. I mean, my financial freedom, I'm more of a simple guy. If I have enough to get by, extra savings, I don't live in hardship. I think that to me is financial freedom, but to some people it's going to be different. Financial freedom for them would be maybe to own a private jet and then be able to travel around the world without having to worry about their finances, because they got their finances working for them. See the word there, their finances working for them. So even if you're not working and you're thinking, oh, you know what, I'm going to put some money in some investment, and that money is going to work for me. Okay, you don't have to work, but you still need to get your money to work for you. So there's still risk involved, right? With any kind of investment, we'll take a look at the different investment and the asset types later on. But there's always going to be risk involved. It's just understanding what those risks are, how do you minimize those risks. I think that's basically it. But again, financial freedom, it's a huge word. What you need to do with this session, what we're going to go through with this session, is actually break down this financial freedom and separate them into financial goals in smaller bits and pieces that you can work yourself towards too. Okay, so financial freedom, it's if I'm a salesman right now, I'll tell you, you know what, you'll have your financial freedom. But how do you define financial freedom, right? I'm not here to sell you the dream. In fact, I'm right now taking you away from your dreams and setting them into goals, because to me, financial freedom is going to be unique to everyone. Everyone has a different perception of it. So you need to understand what this financial freedom is. Otherwise, when you jump into trading, you kind of don't know what you're aiming for, and that's the thing with trading. A lot of people jump into trading without understanding the whole financial planning and stuff like that. I'm not a financial planner, and I'm definitely not one for you guys, okay? But I'm just here to tell you, when it comes to trading, you need to be planning, right? But if you don't know what you're doing and you're just jumping into trading because someone said, oh yeah, it's easy money. You can turn small accounts into big profitable accounts in an instant or in a short period of time, those kind of stuff, right? You've been sold the dream. Maybe 70% of you are being sold the dream. But the thing is, you kind of need to know the basic understanding of what you're dealing with. We're not even going there. We're actually going to talk on a general level here, okay? That's why it says all levels, because we're going to talk about general financial level here. General financial level of understanding financials, okay? So let's go on. We talk about dreams. We talk about goals, okay? The next step that you want to do is you basically want to categorize your goals, okay? So There's actually three. There's actually more, but I'm just going to show three as an example that you can maybe start to categorize them separately. For example, basic life and money goals. Like maybe you want to build up the savings, right? Maybe you want to have 20,000 in your deposit, in your bank account. Maybe you want to save 20,000 in a year. So divide that by 12 and you basically get how much you need to save up every month. Maybe you are planning a renovation within the year. Obviously you need some cash for renovation, you need that money saved up. So this is basic life and money goals. Maybe you need to pay off your credit card debt before the interest rates start spiraling out of control, right? Maybe you want to buy a car. You need a car. A car could be a want, a need, right? We'll talk a little bit more about that later on. But the next one is building emergency fund. To me, before you even start dreaming or anything like that, it's always good to start with this emergency fund. It's always good to have extra money saved up somewhere just in case of rainy days you kind of need to use them. Okay, basic life, right? Set a career goal. Maybe you want to start a new business, maybe a new job, getting a promotion that you've been aiming for. This is simple stuff, right? I mean, you guys start thinking, what is this guy talking about? We're here for trading and stuff like that. At the end of the day, we're going to talk about your financials, right? I mean, if you're thinking of trading, which is to a certain degree like short-term investment, where are you going to get your capital to start investing? That capital, maybe for 90% of us here, it's going to be from your day job or from your part-time job. Okay, maybe that 10% is from inheritance. I don't know. Okay, everyone's situation is going to be different, so you need to think about it in that context. That's going to be your basic life and money goals. Okay, and then we got family related goals. So you're starting to break down your goals. Which one is for you? Which one is your basic ones that you kind of need? Which one is family related? Maybe you want to get married, financially plan for raising children. Raising a kid is not cheap. So if you want to have 5 kids, you got to think about how you're going to feed them, right? When they grow up, maybe you want to pay for their college tuition. You got to plan for their education. Education costs money. It's expenses. Okay? Maybe you are planning to leave the workforce within the year to care for your children or your parents or your family. Or maybe you want to take some time off from the workforce to pursue further education. You got to plan that ahead, right? Before you even say, yeah, you know what, I'm going to quit tomorrow. It just doesn't work that way because you need to save up some money before you can start quitting, right? So maybe you're planning to take a course in, let's say, the next 7 months. So you got 7 months to plan out this goal, okay? So maybe, you are trading because you're planning to earn extra income. Okay, what's that extra income for? Maybe you want to, I'm actually doing it, right? I'm actually trading so that I can leave some inheritance for my family just in case anything happens to me. But, I want to secure my kids' future. So part of my reason for trading is actually this. It's planning an inheritance for the family. Okay? Maybe you are trading because you got your retirement goals here. You want to retire from working full-time. I guess you guys can answer me if this is correct, but if that's how you feel, you want to retire from working full-time, type in yes on the chat so I can see what's going on, if you guys are actually paying attention to what I'm saying right now. Okay, maybe you're planning to retire early. Okay, planning where to retire. Maybe you want to move to the United States, maybe Australia, maybe Canada, maybe Japan, Brazil. I don't know, right? Your choice. Maybe you want to move for better climates. Maybe you are living in a cold climate condition. You want to go to somewhere tropical, right? Maybe you want to live in a place that has a lower cost of living so you can enjoy life a little bit more. Maybe you want to move closer to your family. or this is going to be super realistic, but a lot of people do have to pay their mortgages. Maybe you want to pay off your mortgages before you retire. So these are your goals, right? So once we start categorizing your goals, it'll become clear, because without one dream that you have, financial freedom, for example, to achieve that financial freedom, when you start breaking it down, it actually kind of encompasses everything that's listed on the screen here for you. Okay. Dream is success status. Goals is the process stepping on level by gaining the success. That is correct. So it's like the reason why I'm breaking it down to goals. To me, goals are just steps, right? They're like building blocks, you know. I don't like the word dream. I work in the industry for so long, and I saw a lot of people that got sold the dream, and then reality hits them that, you know what, it's not as simple as that. You kind of need to know what you're doing. Not saying it's not possible. It's just that it takes a little bit extra work from your side to kind of break it down. So I don't like to use the word dream. I like the word goals, right? Building that success, it takes it goes step by step, right? You can't just go, I want to build up my savings, I want to buy a car. You know, it's one or the other first, right? You need to build up your savings so that you can buy a car, you know, that kind of thing, right? So it just doesn't work with, you know what, I want to go to um, I want to travel around the world for 1 year. So where are you going to get the money from? So you got to think about it. How are you going to get the money, right, to travel around the world for 1 year without worry? I'm not saying that's not possible. I mean, you know, a lot of people have done that, right? They work towards that. They work towards that dream, which is taking a holiday for 1 year without having to work. And they basically took a year off from everything just to travel around the world. But they need to prepare before they can actually go and travel. So we're talking about the preparation stage rather than anything else. Okay? So categorize your goals, break it down into smaller pieces, and then next up is to prioritize your goals. Because goals can be categorized, when we talk about priority level, there's actually going to be three. One is critical. Critical means urgent. Critical means you have to have it, okay? And then there is the need, right? I need to buy dinner for next week. You know, I need to buy dinner for tomorrow. You know, I need to have my lunch. I need to get my dinner. I got to have everything planned out. So basically, we talk about budgeting, okay? When we talk about needs and wants and critical. So we're starting to get there. You know, you gotta categorize your goals, right? I mean, like building an emergency fund. Is it a critical? Is it a need? Or is it a want? To a lot of people, it's actually a want, because a lot of people don't realize the need for it. Maybe you need a car to travel to work, right? It just makes a lot more sense. Or maybe it's cheaper to start planning out to buy a home because rental prices are going up. You know, it becomes it changes, right? As time goes by, a need could become a want could become a need, okay? But you need to prioritize which is your critical goals, which is your needs, which is your wants, okay? And then you can break it down into time frames. So when we talk about short-term financial goals, we're looking at 6 months to 5 years. Okay, anything up to 5 years, that would actually still fall down into a short time frame. Okay, medium-term financial goals is actually 5 to 10 years, and then long-term financial goals are actually more than 10 years. Now, if you talk to a lot of investors in the stock market, investors, they are not trader. When we talk about investors, they're looking at multi-year time frame as their goals. They want to see a return of so much, so and so in 5 years to 10 years. That's their kind of goal. That's their kind of time frame. So when we talk about trading, investing, time frame is so important right now, because to a lot of people that are trading, like scalping the market or an intraday trader, one day is the time frame. 2 days could be there. The 2 days could be considered long term for them, but in a financial world, or in a general financial literacy, we talk about short-term financial goals ranging from 6 months to 5 years, right? It could be 2-3 months, but realistically, we always take the 6 months time to kind of budget and plan ahead. Okay, medium term, 5 to 10 years, long-term financial goals, more than 10 years, and you need to be very specific with your dates. For example, you're planning to buy a $50,000 car in 2 years and you want to pay cash. You don't want to take a loan out. You want to save up for 2 years and you want to pay cash. So the bare minimum is to actually start saving $2,100 a month, because multiply that by 24 months, you are going to get $50,000, enough for you to buy and maybe earn some interest. Okay. So you need to create deadlines so you can plan and budget ahead. Okay. Another example that I didn't have it in here is maybe you have a 5 years old and you're planning for their college expenses. So you got to think, what's going to happen in 10, 12 years? That becomes your deadline, right? Realistically, you have 10 years to figure it out, or you have 10 years to plan the whole thing out. And I know inflation happens, prices could be more expensive, you got to factor it in, but generally you have to start somewhere to move towards that goal or towards that dream. Okay, so here's a financial goals worksheet. I'm gonna leave it here for a minute. You guys can have a look at it, but basically separate your goals into short-term goals, mid-term goals, long-term goals. Set up a target date to achieve that goal. So, and then your priority on that goal, is it a critical? Is it something critical, something urgent? Is it a need? Is it a want? Okay, and then check if what's the current savings that you have. Maybe you have 10,000 or 20,000 in your bank account. Maybe you want to start thinking, I'm going to take 5,000 out of that and start a new saving account so I can buy my car faster than 2 years. That will be your current savings towards that goal. Okay, and then you calculate the additional savings needed per week or per month, and this is where your target date to achieve that goal comes in. Okay. So I'm going to leave it here for a minute while I go through the chat. You guys want to take a screenshot of it, feel free to do so. There's a lot of this financial goals worksheet, but I like this one because it shows the basic needs where there's a deadline, the priority level, what you have right now, what you're working towards. I like this worksheet. So if you guys want to grab this, and you start breaking down your dreams into goals by using this worksheet, I think this is a great worksheet. I don't want to do the job. You don't want to work. Building up financial for specific goals. That's right. Okay, that's the whole point with the session with this financial goals. Just right in time to about halftime here, so let's move on. But you guys can always review this, take the screenshot if you need to. So here are your steps to achieve your financial goal. Okay, I'm not saying financial dream, I'm saying financial goal. You gotta make your money work for you. Okay, that helps out a lot. Plan an investment plan. When we talk about investment plan, even your monthly savings towards a goal, that's an investment, because you invest, you set aside a separate fund. That fund is going to earn interest in your bank, therefore it's still an investment plan. Okay, next step is to categorize financial goals as short, medium and long-term goals. So this is a quick summary. Set a target date to achieve your goal. Prioritize each financial goal, whether it's an urgent goal, a need, a want. Okay, so obviously urgent, super urgent, you definitely need it. It's beyond need. Okay, know how much money you have and what you need to save. So you can break it down to 5 simple steps to achieve your financial goal. But obviously, the first thing you need to do is you gotta think hard, because you have to explain it to yourself, right? Which one is your dream, and how are you gonna create goals to achieve that dream? Okay. Okay. Next time we want to talk about is classifying assets. They're actually a little bit of an information here that I think a lot of people are not gonna like it when I talk about it, but it needs to be done. We need to classify some assets that we have, okay? Because we want to talk about liquid versus illiquid assets. Illiquid assets are assets that are not easily or quickly sold or exchangeable to cash without losing a significant value if you want to get rid of it in a short period of time. Okay, liquid assets are assets that are easily or quickly sold or exchangeable to cash. So basic, clear definition there. So let me give you an example, because we're not talking about trading specifically tonight. We are going to talk a little bit more about understanding which one is liquid or which one is illiquid assets before you start going to your investment planning or whatever. Okay, illiquid assets would fall into something like a real estate. If you have a home, a land, a building, an apartment, okay, a farm, a ranch. Motor vehicles, it's illiquid. It's easier to sell than a house, but it's still illiquid. Okay, the buyers are specific. There's a specific pool, depending on the quality of the car and stuff like that. So it becomes illiquid. You can't just say, I want to sell my car or my bike in a day. It's gonna happen. I need the cash now. I can get rid of it tomorrow. It just doesn't work like that for liquid assets. Okay, art and collectibles. Some people have hobbies. Pokemon cards are worth money. Some people collect comics. Okay, video games, watches. All right, or maybe they are not collector. They hold value. They are assets, but they're not easily disposed of. Okay, antiques. Okay, an investment in privately held companies. Okay, investment in small businesses, investment in debt. Not sure how it works in your side of the world, but on my side of the world, or in some countries around my side of the world, people like to invest in debt. People like to invest in debt, like, they lend money out for interest, right? That's investment in debt. Okay, shares of small cap companies would fall into illiquid assets. Okay, there's a lot of scams around small cap companies, so you got to think about it. When we talk about liquid assets, we got cash. Cash is king, right? And when we trade FX, I know you're trading through computers, you're trading through contracts and stuff like that. It's still cash, okay? Bank deposits and savings, still cash. FX CFDs would still fall into a liquid assets. You can dispose of your position easily. Like when you trade with Octa FX, you close your position within milliseconds. You can realize your profit, or you can minimize your loss. Okay, you can do that very quickly through FX CFDs. Equity CFDs can do that. Exchange traded funds can do that. Okay, stocks traded on major exchange without leverage. Obviously, we're talking about traditional stocks. Shares in large cap companies. Obviously, if you invest in Apple, there's always going to be a buyer if you want to sell your stocks. Okay. Cryptocurrencies, for now, while there's still demand, it will still be categorized as liquid. It might not be the case for some of the smaller coins. There's a lot of random coins out there, but the major stable coins, they are liquid. Maybe you want to trade future contracts like commodities, like gold contracts, oil contracts. Indices, feature indices, US 30, Nasdaq 100. Those are liquid assets, right? So these are your classification for liquid versus illiquid assets. Okay. Next one I'm gonna talk about is tangibility. Okay. So we talk about tangible versus intangible assets. Let's classify tangible assets. There's actually a huge definition between liquid, illiquid, tangible, and whatever not. But break it down into one sentence. Tangible assets are assets that have physical form that you can feel and touch most of the time. Okay. Banknotes, obviously, open up your wallet. Some notes there. You can touch it. That's $10. That's $50. That's $100. You can touch it. You can feel it. You can smell it if you want to. Gold bullion. If you literally buy a bar of gold, you can touch it. You can feel it. Not so much with contracts. Okay. If you own a house, that's your asset, right? If you you can walk into your house, you can touch it, you can touch the walls, you can touch the floor, you can kiss the door, you can touch it. Vehicles, if you have a car, that's an asset, although I would put that more into depreciating assets, but it's still an asset. You can touch it. Equipments, maybe the chair I'm sitting on, that's my asset. Okay. My microphone, that's my asset because I need to work by using that microphone, my keyboard, my mouse, my computer. Okay. Inventories, stock and bonds, because there's perceived valuation with monetary value. Okay. When we talk about intangible assets, I'm using an intangible assets right now because I have a specific skill sets that I'm using to trade. Okay, I use that to mentor people. I use that to give out this webinar right now, which is my brain, which is my intellectual property. That's my skill set, right? My image is my brand. My balding hair and my glasses, they're probably my trademarks, right? The slides that you're looking at right now, that's my intellectual property, right? But that again, you know, the next one is actually cryptocurrency. Believe it or not, but cryptocurrency is actually categorized as intangible assets by accounting standards. Okay, because the perceived value derived from non-physical or monetary value, therefore is actually intangible. So when you trade cryptos, you're dealing with intangible assets. If anything happens, the difference with this is that if anything happens with your investment, okay, you can somehow exchange some of this. For example, your gold bullion. If you need that cash, you can obviously sell it off for cash. But skill sets and stuff like that as intangible. My value of my skill set is going to be different from you valuing my skill set and stuff like that. You know, cryptocurrency. If you lost your wallet, you forgot your password, it's gone. Okay, stuff like that. You can't actually go to anyone and say like, hey, I lost my password, I want to recover my password. It just doesn't work that way. So to a certain degree, tangible and intangible assets, there's a little bit more sense of security with tangible assets because you can actually touch it, you can actually feel it. There's that sense of satisfaction. Okay, you know, I like my house, and when I come home every day, I feel happy. You know, coming into my house. You know why? Because I can see my house. Obviously, I see my door, and stuff like that. Right? Those are my assets. I know. I work for it. It's tangible. To a certain degree, there's that sense of security between tangible and intangible assets. You just don't get that sense of security with a lot of the intangible assets out there. Okay. Legal agreement or a contract, that could be an intangible asset as well. So that could be a contract to guarantee something. Okay. Okay. So let's take a pause here and then talk about type of investments. If you guys can chime in, maybe type something. what do you guys think is a type of investment? We're not talking about asset classes right now. We're talking about asset classes. We're not talking about the description of the asset, but obviously I did mention a few words there that you can maybe pick up. Maybe answer me what are some of the type of investments that we can look into. If you can type in the chat, that would be great. Okay, so while you guys are typing, I'm gonna move on. Okay, let's talk a little bit more about investment vehicles. Okay, now you can start breaking this down a little bit. Okay, stocks, they actually offer the potential for the highest return over time, but does fluctuate wildly over shorter periods. Bonds offer steady returns with a fixed payout, but can vary as interest rate rises and fall. Funds, when we talk about funds, it could be mutual funds, it could be an investment fund, it could be a portfolio investment fund, obviously. Okay, they tend to be diversified because they usually hold many investments. A fund could maybe have 30% invested in real estate. I don't deal with real estate, but when we talk about the funds that I normally separate them into, we've got different asset classes. Some of them are in the equity market, some of them are in the bonds market, some of them are in the commodity market. So they cover a lot of markets. Okay, but a specific fund may hold only one kind. For example, consumer good companies, a portfolio fund that deals with consumer good companies. Maybe a fund manager could have a Forex only fund where it's only Forex in there. Okay, and then we got real estate. Can appreciate slowly over time and offer the potential for income, but physical real estate can be expensive to maintain, and commissions are high when you get rid of it, or when you buy something in the real estate market. So it might suit some of you. Some of you probably have real estate investments already. Okay, I think owning a house is an investment. Term deposits, saving accounts, they are not going to fluctuate in value, but they will grow steadily based on the interest rate or other contractual terms. Now, I separate investment vehicles from short-term investment or trading. You guys, most of you are going to be familiar with the short-term investment or trading side. We've got CFDs, right? Which is what you guys are dealing with, your Forex market, your equity market, your commodity market. You got your stocks, you got your crypto market. So even crypto is actually a separate asset class, by the way. They're not currencies, even though some of them are called cryptocurrencies, right? But cryptos are not in a traditional sense the same as the currency market that you guys are dealing with. For example, the Euro USD, the Pound USD, the dollar yen. Okay. So the reason why I'm talking about asset classes and the different type of investment vehicles, because we're going to want to talk about a little bit more about diversifying your portfolio. I actually have a few slides on the FX diversification. Okay, so if you're trading currencies and you want to know how to diversify your portfolio and stuff like that, and why do you want to do that, we're actually going to talk about that soon. Okay, but let's talk about diversifying your portfolio in a general sense, and this is why we are covering a lot of the other investment vehicles. We're talking about a lot of the different asset classes, because you kind of need to have that information to create a diversified portfolio. So the importance of diversifying your investment is that diversification reduces risk by investing in investment vehicles such as different financial instruments, industries, and other categories. Okay, so you heard the saying, don't place all your eggs in one basket. That's basically what diversification is. We are talking about systematic risk. We're talking about unsystematic risk. Okay, unsystematic risks like natural disasters or risks outside of the market, okay, they can be mitigated or avoided through diversification, but systemic risks or market risks is kind of generally unavoidable. When we talk about systemic risk. If you are, let me explain a little bit about systemic risk. If you are trading currencies, okay, it has different risks than compared to trading the futures indices, right? If you're trading the sterling yen, for example, and you want to compare that to, let's say, trading the US 30, they are going to have different risks, okay? Because the US 30 is actually going to be measured based on the equity market, while the currency market is just based on foreign exchange, right? So they have different risks. And then when you start leveraging an investment, they are going to have a different risk compared to, for example, an unleveraged trade. So let me give you an example. If I have 100 US dollar and I don't leverage it, that means I have 100 US dollar. But if you guys are leveraging it by 100, you basically have $1, literally have one, and then you leverage it into 100. So if anything happened, that risk will be 100 times on your side as well. Okay, so that's the kind of risk that's going to be different, even though it's in the same market. Even though we're talking about the FX market, right? Both are in the currency market. One leveraged, one unleveraged. So you guys have to think about that. Which we are going to cover this in the future when we talk about money management and stuff like that. But this is something that you need to think about when we talk about systemic risks. Investors can choose to pick their own assets to invest in, okay, or buy into a pre-built portfolio or fund. Obviously, you need to look for a fund manager to do that, or maybe you can go to the bank and buy into an equity portfolio, mutual fund, okay. But I'll be honest with you, balancing a diversified portfolio, it's actually pretty complicated. I'll tell you right now, it's actually pretty complicated, and it can be very expensive because when you start going to fund managers or wealth planners, financial planners, they do cost money. All right, so either you do your own research and start doing it yourself, or you pay someone else to do it for you, and they charge good money for that because it's actually not an easy thing to do. Okay, and it could actually yield a lower result if you diversify your portfolio in return for less risk. Okay, so you're paying more, gaining less to have less risk. Okay, so a diversified investment may lead to better opportunities, but you might enjoy researching something new. For example, you want to diversify into physical real estate. For example, you don't have any idea about how to invest in real estate. Maybe you just won that lottery, and what are you going to do with that money? Maybe you want to invest into the real estate market. You got to research that market, right? Okay. And you basically, if you diversify it, you will have lower yield for less risk, but it'll then become a higher risk adjusted returns. Okay. Okay. Let's talk about diversification in CFD trading, because I know some of you are probably going to be here for that. Why do we diversify when it comes to trading, especially in the FX market? It's because we want to avoid concentrated risks. We want to spread out the risk. Okay. Maybe I like to build a trading strategy that is less reliant on stop loss. I'm a swing trader. I like to hold my position for days. Sometimes I don't want to use my stop losses because I know the volatility in the market is going to be there, but I need to have something to kind of limit my risk, right? That would be maybe to hedge it in some other currencies. But the moment I start doing that, that means I start diversifying my portfolio. Okay, so it will actually allow room for market volatility to happen. Okay, averaging takes out the need for precision, allows more time to react to changes in the market. For example, the CPI numbers in the US that came out on Wednesday, we were doing a live session, right? If you're trading one and then the volatility hits your stop loss, okay, that could be the case. That's why we want to diversify our portfolio. We want to have different currencies, right? Smaller positions, but in a little bit more currency pairs, okay? So it'll actually become a natural risk hedge. Portfolio selection also allows for regional risks. For example, I only trade during the European and the US session. So I want to focus on currencies that are active during that session. I actually avoid Asian currencies. I actually avoid Asian session severely. I don't like to trade the late US session. So I actually avoid a lot of the currencies out there. I want to focus on a smaller pool, okay? So it allows you to focus on a particular market and time, okay? A portfolio can track a commodity or a particular currency as a base build. Let's talk about currencies as a base build and some of the few examples that we have here. Okay, so let me give you a quick example of a portfolio. For example, my portfolio, I have about 40% of them in pound USD. I've got 25% of them in sterling yen, 20% of them in euro yen, and then 50% in euro USD. This is for example only, okay? Not necessarily that this is actually going to be my portfolio, but I'm diversifying because I'm holding the sterling, I'm holding the dollar, I'm holding the yen, I'm trading the euro, okay? So I've got my options. I'm not just locked in 100% into pound USD. So if anything happens with the sterling, the euro could help me out, right? The euro might not fall as bad as the sterling, or the yen could help me out, okay? So when we talk about portfolio selections, we actually classify them into some of this, like majors, okay? So your portfolio could consist of the euro USD, the dollar yen, the sterling USD, or the cable, the dollar Swiss, the Aussie USD, New Zealand USD, dollar Canadian. That will fall into the majors, okay? Maybe you want to focus more on the euro session, right? So you could be trading the euro USD, the euro yen, euro pound, anything euro AUD, euro CAD, euro Swiss, euro New Zealand. And then you only trade during the Euro Open, for example, or during the European session. If European session ends for the day, you kind of clock off, okay? Which, again, as your situation changes, sometimes you need to take a look at different time frames or different trading sessions, okay? You could be sterling focus, you could be yen focus, okay? Or maybe you want to focus more on commodity dollar. You only trade the dollar Canadian, Aussie USD, New Zealand USD in relation to oil prices or metal prices. You can do that. Okay, these are just some of the examples to make things easier for you to get by. Okay, but your consideration for a portfolio selection is that you need a counterbalance in risks. Okay, we need to talk about correlation. And we just don't have the time to talk about correlation, but look it up if you want to go get ahead. Okay, you can consider looking into positive and negative correlation in currency trading, for example. You definitely need to keep an eye out on your equity. You also need to adjust position and lot sizes according to your portfolio weighting. So if I have 40% in pound USD and I have $1,000 to start trading with, that means I need to limit my trading to a $400 equity that I set aside to trade the pound USD. I'm not supposed to open a position that's going to ruin that equity. Okay, so you got to think about it. Maybe you want to split up your account, right? You want to try out portfolio building. You can start separating, $1,000 into $400 and $600, and then trade $600. Normally, you can try building out your portfolio using a $400 equity, for example. So you can start your portfolio small, and you can diverse with equal ratio or weight. So it'll create something that's well balanced. But what's really important is that you need to stay consistent and be patient, because diversifying your portfolio. It's not something that's going to happen instantly. You definitely need to look into correlations. I'm going to repeat that again if you guys want to research into that before we do our session on correlations in the future. Take a look at positive and negative correlation in the currency market. I think you can Google that. There's going to be a lot of information on that. Okay? Right. So, before we open up and wrap things up, there are a couple of questions to consider for the session. Then that this is going to be asked a lot, right? What is the appropriate investment to suit your financial life and risk tolerance? Okay. If I'm not in a situation to maybe be able to take that leverage, maybe I need to think about how much I should be leveraging. So you should ask this question: are you able to invest without leverage? If you can invest without leverage, it'll minimize the risk. When you invest with higher leverage, the risk gets multiplied with it. Obviously, when it comes to money management in trading, we'll talk more about leverage. I think we did a couple of sessions in the past about leverage. We did talk about risk management before, so you can search on the Octa FX channel on risk management. There's going to be talk about leverage. Okay. When you start out trading, obviously you need to understand what leverage is. If you don't get the risk behind leverage, I think you need to review it again. Okay. What is appropriate investment? Do you own a real estate? So if you own a real estate investment, is that something that you want to hold on to? Is that something you're going to keep? Or is it something that maybe you bought a house because the neighborhood's going to grow and then you can sell it off in the future? Plan it ahead. Okay. Those are the kind of investment that suits your financial life. For example, if you come across an inheritance or win a lottery, all of a sudden you have a lot of cash. Maybe you want to take a look into owning a real estate, right? Diversifying your investment. Then we talk about your risk tolerance. Do you prefer higher risk for higher gain, or steady but lower gains with lower risk? I'm more on the steady but lower gains with lower risk. I don't like to use high leverages when it comes to trading. I have a separate portfolio just to handle equities unleveraged. Okay, so I like that steady but lower gains with lower risk, because my risk tolerance is that I can't take a lot of risk. It put me under a lot of stress. Okay, so I need to minimize my risk. So next one is how change in your lifestyle might change how you invest. For example, you got a new family, you just got married, or you got a kid coming, right? That's going to change your financial lifestyle. It's also going to change how you invest, because if you are working towards that goal sheet that we have earlier, the way I notice it is this: people don't want to admit it, but once you start having a family, you start minding about the risk because you're not thinking about yourself anymore. So someone that's single and someone that has a family, they have two completely different mindset. Most of the people that have families, they start thinking about others in their family. Okay, it's not just themselves. So they kind of have to divide that risk. They have to review their risk tolerance and stuff like that. They plan more. That's what I noticed. Not singling out anyone that's single. Okay, maybe you have a new job. You have a new working hours. In the past 2 years, I'm not going to say all, but I'm probably going to say 90% of us have to adapt to the new normal, right? Some of us go back to normal. Some of us just don't. To me, pre-pandemic, post-pandemic, I actually felt that I'm a little bit more busy working from home. I've just got a lot more stuff to do working from home rather than, going to the office and just clocking off every day. So I've got the new working hours. I actually have to adjust my investment strategies around my new working hours. Okay, most of you maybe fall into the part-time job, moving into a full-time job. That's going to change stuff. Normally you work 6 hours a day, all of a sudden you have to work 8 hours a day, for example. Or maybe you go from full-time to a part-time job, you actually have more spare time, you can actually trade in different market, you can invest in different markets. Okay, should you convert your existing assets and investment to other assets? Yeah, I mean, for diversification purposes, yes. But to a lot of you, I'm gonna say, if you're comfortable with what you're doing or you're with your investment, you're happy with your risk, most of you probably don't need to change. But just don't do something like, borrowing money, for example, to speculate in a crypto market, right? That's risky, but a lot of people are actually doing that, but they're not planning ahead. So this is more on to your common sense. If you're comfortable with something, maybe you want to try something new. If you have spare equities to invest on, maybe you never traded the commodity market and you want to give gold a go or oil a go. Maybe you never traded the US 30 or the Nasdaq 100, and you want to learn more about the equity market. That's the underlying market for those future indices. Okay, so yeah, I mean, you can start thinking about converting your existing assets to other investment if you have diversification in your mind. I think that's one solid good reason. But I mean, if you're doing it just because of the hype, or that's why I don't like to use the word dream. But a lot of people that got sold the dream, they actually converted some of their stable investments into something risky, right? You need to consider that risk. So it goes back to your risk tolerance and stuff like that. Whether it actually makes sense if it's part of your investment plan, and you need to convert those assets. Maybe yes, maybe you have 3 cars, you don't drive the other 2 cars. Maybe you want to consider selling those cars and exchanging it to a stock that you like. Maybe you like Apple, Amazon, Coca-Cola. Maybe you drink Coke every day, and it makes sense that maybe you want to have a piece of that history with you. So yeah, those are okay. Okay. So I think that's it. So I'm gonna open the room for some Q&A session. If you do have any questions, do let me know, and we can talk about it. We can discuss about it. We can have an extra 5 minutes and talk about it. So I'm gonna go through the chat right now. Please explain a successful strategy on gold trading. This session is not about trading strategy, but look for in the future. Definitely something to look into. Maybe we can talk specifically about gold trading. Time and planning. Thank you. I'm doing only intraday. How can I change? Change obviously depends, right? When we talk about change, that's something you actually need to ask yourself, because people can persuade you to change, but do you need to change? That's the kind of stuff that I don't think you should take in from others. That's why separating your financial goals, understanding your financial dreams and your financial goals, I think that's the first step to take into before you can start that change. It has to begin somewhere, and maybe give it a go. Start by separating your goals. You can start there, and then you can build towards that change. Um, how can someone get a new job and new working hours? By applying for a job. So yeah, I mean that's just logical. I mean, if you want a new job, you look for that new job, right? It's not like someone's gonna call you up and say like, "Hey, I got a new job for you," without you doing anything. If you don't submit your resumes, if you don't submit your CVs, obviously no one's gonna know that you're looking for a new job. You know, stuff like that, and stuff like this needs to be planned. It's part of your financial goals. Again, as I mentioned, for you to do something, you kind of need an income to start investing or saving into something that you actually plan ahead. Okay, so someone can get a new job and a new working hours by applying for a job that maybe they want. Maybe you don't like working in the F&B industry. Maybe you want to try working in the financial industry. So take some courses so you can get a job in the financial industry. You know, something like that, or the other way around. It's completely up to you. But again, you got to plan that ahead. So, for example, if you want to work in the financial industry, for example, you need to work in a bank. You need to work towards certification for you to be able to be a financial planner, for example, or to be an accountant. So you got to plan ahead to pay for that educational expense so that one day you can be an accountant, you know, something like that. So it's not really just about trading tonight. It's more about your general financial goal. Okay. You don't understand diversified portfolio. So, for example, let's talk about general diversification of a portfolio. Okay. Let's talk about asset classes. Okay. If you're trading FX CFDs right now, that's your short-term trade or investment. Okay. And let's say you have 10,000. Okay, let's do 10,000. It's just easier. Maybe you want to have 4,000 for your long-term investment goals. Maybe you want to have 4,000 invested in some tech stocks, for example. So you split your 10,000, 6,000. You're gonna use that 6,000 to trade your trading account. That's your intraday trades, your scalping, your swing trades, and then you separate one $4,000 account for your 5-year investment goal, for example, in tech stocks, something like that. Advice for a younger teenager like me. You need to be 18, I believe, to start trading. Yeah, I mean, if you're under 18, that's gonna be tough. But I think it's a great idea to start young, to know what the financial market is, to know what trading is, and stuff like that. Not necessarily to jump in straight into it. So part of the reason we're doing this is not, for people to rush in without understanding what's going on. Okay, maybe before you start trading, maybe you start setting up your goals. Well, what do you want to do? You're a teenager, obviously. Maybe you still need to plan for your college expenses. Maybe you need to plan for your future. Start planning. What's going to happen to me in 5 years? What's going to happen to me in 10 years? Stuff like that. Is starting trading bad? Plus and minus. If you know what you're doing, I don't think it's bad. If you don't know what you're doing and you're being rushed into it or being pushed into it, I don't think it's a great idea. It depends on what you want or what your perception is. If you understand what's going on, you know the risks involved, I don't think it's a bad idea to actually understand what it is and have a little bit of an experience. But again, I'm not here to advise anyone under 18. Okay, I don't think you are able to trade under 18. Okay. How do you balance the equity market? What do you mean by how do you balance the equity market? And when we talk about equity market, we're talking about a huge spectrum of market here. We could be talking about the US stock market, we could be talking about the Australian stock market, um, the Singapore exchange, the Shanghai exchange, the Nikkei exchange, they're all going to be different. Now, when we talk about the equity market, to to a certain degree, there's actually a little bit more research needed to understand the specific industries or the specific sectors. That's why a lot of people that come from the FX market actually trade the US 30 and the Nasdaq 100 because it's kind of a general weighted average. Okay, they don't necessarily need to understand a specific sector. For example, I'm not really good at dealing with the pharmaceutical sector. What I'm good at with the equity market is the tech sectors. I follow the tech sectors because I have an interest in technology. I know what's going on. I read news about the technology sector. So yeah, I like that. I don't do well with the consumer goods sectors because I just don't quite like that industry. So again, before you jump into the equity market, obviously you need to understand what you're dealing with. It's not some general standard. It's not a general standardized term. Equity market. How do you balance it? It just doesn't work that way. You can, if you're familiar with the FX market, maybe you have less time to research, or you're starting to get into the research. I'll be honest with you. The FX market and the US 30 market, the futures indices are there's probably less research involved rather than specific equity investment. Okay, a lot of the equity investment are not short-term trades. They're actually for long-term investment goals. Do I believe in market manipulation and stop loss hunting? I think stop loss hunting I'll be honest with you, it's stupid. Um, The reason why I'm saying this is because this is what comes out from retail traders in online trading, right? When we account the whole FX market, I think there's only about 20%, 30% that falls into the category of online trading. Okay, out of that 30%, when we talk about retail traders that talk about this stop loss hunting stuff and then they lose their position and stuff like that, I have a strong view on this. It's just that they don't understand where their stop placement is. No one's gonna hunt your stop loss. If you have a $1,000 account, a $10,000 account, even you know what, $100,000 account, it means little for a company to ruin their reputation to hunt that. Okay, that's my view. I don't know what it is, but I'll be honest with you. I've worked for both sides. I mean, I've worked for the client side. I've worked for the broker side, and this comes up a lot. I think when we talk about manipulation, stop loss hunting, and stuff like that, there's reputation involved. Okay, so yeah, just use common sense. If you are trading a really really small amount of capital, that's kind of pointless for brokers that might have thousands of clients to specifically target one guy with a specific stop loss by opening up a mini lot, micro lot, or standard lot. It just doesn't make sense. Okay, is there any way someone can get this job with trading, and how can someone apply for me? You figured that out yourself. It's okay. If you make an effort, I'm gonna answer logical questions, but if you start coming with me with illogical questions, then I'm just gonna ignore it. Okay. I think that's all the time we have for tonight. Thanks for joining in. Do leave your feedback on the comments, or there's a link there for your feedbacks. Okay. And I'll see you in the next session. Have a great weekend.